Welcome back to another episode. Today we're going to take a closer look at Advanced Micro Devices, AMD, one of my favorite semiconductor companies. They just reported earnings. We can see after hours the stock is up 1.5%, and on the day they were up about 3.7%. So in today's episode, what I want to do is the following. First, take a closer look at the earnings, talk about the good. There might be some bad as well, but also I'm going to share my overall thoughts on the overall company stock price. So let's take a closer look in today's episode.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
Alright, so if we jump into here, their Q4 2022 report, we can see revenue was up 16% year over year. They do mention a nice amount of this growth is thanks to two main markets, the data center market, which we're going to see in a bit. Obviously, thanks to their Xilinx acquisition, the overall embedded market is also one of the main reasons the stock is up on a year-to-year basis. If we take a closer look at gross margins, unfortunately, it's only up 70 basis points. The main reason is they are seeing a decline in gross margins from that client market because of the inventory correction in the gaming market, but because they're selling more embedded products, because they're selling more data center products, those tend to have higher margin mix, so they were able to kind of keep their gross margins up about 70 basis points. Operating expenses are up about 45%, mainly thanks to that Xilinx acquisition. Unfortunately, if we take a closer look at earnings per share, they were roughly 69 cents versus 92 cents a year ago, down 25%. Main reason, shares have kind of been diluted ever since the Xilinx acquisition. But overall, if we take a closer look at net income, they are pretty much flat. Taking a closer look at this company's kind of balance sheet, we can see they have roughly $5.8 billion cash and short-term investments. They do have total debt of about $2.5 billion. I want to say this quarter alone, they only bought about $250 million back of a repurchase program. I want to say this was pretty weak for the quarter, but for the overall year, they did return a nice amount to shareholders via repurchase program. I wish they would have paid a little bit more, bought a little bit more this quarter. That's one thing I wasn't too much of a fan of. Outside here in their balance sheet, we do see inventories is up to $3.7 billion, up almost $2 billion versus same time last year. Main reason is this company is releasing a lot of great new inventory. They're ramping up their Genoa, their Bergamo as well, and they are expected to release future products like the MI300. They're still seeing strong growth in the kind of embedded market, so that's one of the main reasons they have this kind of huge load in inventory. So overall, the company's balance sheet, in my opinion, is okay. It does suck how their total debt has increased a nice amount, but the cash and cash equivalents is also there. It seems like this company was just trying to position itself to be a nice kind of cash having available to them during the kind of macro times that we're at right now. Now, if we take a closer look at their overall results, based on segments, the data center market is up 42% year over year. Growth here. They do mention this is driven by numerous products. First, the most important, their AMD EPYC processor. That's the biggest driver here, but they are also seeing kind of some growth into data center solutions that were made possible with the Xilinx acquisition. The client market, unfortunately, is down 51%, and it is working at an operating loss. The inventory correction happening in the in the consumer side is still pretty heavy. We are going to talk a little bit about their outlook in a bit. The gaming market net revenue was down 7%. Luckily, they are still in an operating income profits, which is a great thing. They are seeing that weakness in the GPU market. That's to be expected, but we are seeing that kind of strength still in the gaming SoC, which is the chips that go on the PlayStation and in the Xbox and all of those other gaming markets. Now, if we take a closer look at the embedded market, $1.4 billion. This is, to me, the most impressive market and the market that gets I want to say one of the least attentions for AMD, all thanks to that Xilinx acquisition. If we take a closer look at that operating income, we can see $700 million there, roughly 50% operating income margin, and they believe there's still much strength in this market, at least for now, due to things like the automotive, industrial, aerospace and defense, and the medical field. So definitely huge growth opportunities here as well. Now, if we take a closer look at the outlook was definitely pretty interesting. For Q1 of 2023, it is expected to be down 10% year over year. I want to say in quarter one of 2022, this is when a portion of the Xilinx acquisition was already taking place. Because this company and the acquisition, it did bless them a bit to kind of hide that year-over-year decreases for a lot of these quarters. But now, since it's going to be a little bit more comparable, we are going to start to see that decrease in year-over-year revenue, especially for quarter one of 2023. They do still expect their gross margins to be roughly 50%, so things are looking good. Now, for the outlook for the full year of 2023, they say that things unfortunately are pretty cloudy. But they do expect data center and the embedded market to continue to grow on a year-over-year basis for the full year of 2023. Unfortunately, they don't too much because, like I mentioned, it's pretty cloudy. The reason being is, one, the client market, even though they believe the client market has bottomed in quarter one of it's going to bottom in this quarter one of 2023. They don't know too much on how it might grow for the full year. There's too many moving parts in the macroeconomics right now. So quarter one is the bottom. Quarter two, they expect sequential growth. Quarter three and quarter four for the client market, they expect stronger growth. But again, it all depends in the macro of things. This is both for the client and the gaming side. In the embedded market, though, they feel a lot more confident here. They do believe the embedded market will continue to grow with all the solutions. The data center market, unfortunately, they do expect a bit of a weakness in the first half of 2023 due to an influx of inventory for some of their big cloud players. But they do expect the data center to have a stronger second half of 2023. Again, with all that kind of cloudy situation, they are kind of not giving us a full year 2023 outlook as of now. I would expect that maybe next quarter or quarter two, we will have a better insight of what's happening. So as we can see, AMD stock price is $75, up 3% and up 1% after hours. The company did mention the client market is kind of bottoming already to some extent, at least for quarter one of 2022. And to my beliefs, the stock market is more of a future viewing. So AMD, I do believe we might have seen the bottom in forms of stock prices. I don't think we might get to see those 57 unless something changes dramatically with the overall macroeconomics at the moment. At the end of the day, though, I do believe AMD, in my opinion, is one of those great stocks for dollar cost averaging because it has a mixture of growth opportunity and kind of valuation at play at the moment. So this is one of my top holdings. It's going to remain one of my top holdings. And if I'm not adding to it individually, I am going to plan to add it via ETFs that I own. So I hope you guys enjoyed today's episode. Take care. Have a good day.